Hello, everybody. Welcome to the training session on general ledger and bank reconciliations. The focus is on showing things that can save users time in their everyday journey throughout the system. Here's what we're going to cover. We're going to get into basic general ledger queries. We're also doing a deeper dive into the chart of accounts than maybe some of you have seen before. General journal adjustments, time on bank recs, get into some of the tips and tricks. We're going to talk about ways that bank reconciliations can be automated and how we can upload different images of things and how that all flows into the reporting. The different changes and the different modifications throughout the training session, we're going to show you how that reflects in reporting. And then hopefully we can jump into bank transfer functionalities. Jesse, I will pass it over to you to do the live presentation of the product.
Thank you. Today we're focusing on the general ledger. First of all, what is the general ledger? The general ledger, it's where everything flows into. All your financials, any money you're accepting from residents, you're going to enter it into MDS. It hits the general ledger. Also hits the tenant/resident account. Any bills you pay, it's going to hit the general ledger. Any journal adjustments you make is hitting the general ledger. And that's where you're going to see all of your transactions listed. What feeds things like cash flows and income statements and other reports. And at the core of the general ledger is your chart of accounts. So let's go into the general ledger and take a look at the chart of accounts to start with. The chart of accounts is a listing of all your GL accounts that are available for your transactions. Now, most of the time, you'll probably have one chart of accounts for your whole system, even if you do have multiple companies. That doesn't mean all of your transactions are mixed into the same set of books. You can combine companies, same reports, but what it means is that each company is going to share the same numbers, GL accounts to pick from when you do your transactions. And that's good because it'll really streamline your operations, for example. There could be certain times where different properties have completely different requirements, in which case it would make sense to have a separate chart of accounts. You can have as many chart of accounts as you want and then link each one to a different company. Another very powerful feature would be the chart of accounts additional information. Your chart of accounts should be the same for every company, but your main income account, maybe it's 4001 or something, is technically called rental income. You do have some co-ops and condos as well. In that case, you'll want it to be called something else like maintenance income. But for reports for certain companies, the GL account could be named differently.
Jesse, just to put a finer point on that, sometimes a client will think that because they have rental income in all their rental properties and maintenance income in all their co-ops, and that they should create a second chart of accounts. But what we're saying is that no, that's your main income account no matter what. When it hits a co-op type company and it prints a report for that, don't call it rental income. Call it maintenance income or whatever we're overriding it on the company level. So that's not a good reason to create a totally different chart of accounts. That could create complication within your organization.
You might be thinking, well, I'll just have rental income and carrying charges or maintenance. But that's also going to complicate things because you probably don't have companies where you collect both types of income. So you probably want one master income account for your rent/maintenance and just rename it per company. And there's some other options with that as well, which we'll get into. But for now, I just want to hit add account and I just want to talk about some of the options in here. So let's say we need to add a new expense account. I've already predefined my expenses. Start with 5. The group I'll talk about in a second, but let's just say it's electric expense. Really what I came here to talk about was the group and these two options. So maybe you have a bunch of expense accounts that are really part of your miscellaneous expenses or operating expenses. Maybe there's electric, water, fuel, all these different expenses. And sometimes on reports, you just want it rolled up as one. It's called operating expenses. Or sometimes on reports, you want to be able to detail it out. So that's where groups come into play. So any account that's part of a group could be rolled up or not rolled up on certain reports like cash flows. And these options make perfect sense where like on a detailed general ledger report, let's say your cash account, maybe you want it to list every single transaction from the cash account point of view, or maybe you just want summary totals because, the transactions are also being represented on the other side of the equation, whether it's the expense account or the income account. So you could run your detailed general ledger reports so that certain accounts are summarized or certain accounts are detailed. That would probably come into play with a cash account. And then if you have show detail for cash basis detail reports checked off, it would show the detail for this account by default, unless when you run the report, you tell it not to obey that, basically. But this is what controls that ability.
And the big takeaway here is that we're just setting the default here. When you're running the report, you can always tell it, show me all the detail for every account if you want to. Typically, it was designed for cash accounts in the detailed general ledger report. If you're including the detail for the cash accounts in the detailed general ledger report, the report will literally be twice as long. So I can't tell you how many times I've had a conversation with a customer or a user and showed them this. And after years and years of using the system, they didn't know that this was an option. So that's one of the reasons we're trying to bring it up now.
All right. So I also want to talk about chart of accounts additional information.
So let's say for a certain company, you want to name an account differently. Instead of rental income for this company, we'll call it maintenance. Now, there are these additional fields as well. There's also a way to do what I'm doing, but for a specific period. Not so much the name of an account wouldn't change per period, but miscellaneous amounts or commentary would change per period if there's a need. Adam, why don't you just talk about that?
Sure. These other fields we have access to through the report design tool. So, for instance, if you wanted to have a section on the bottom of your income statement for commentary, we would be able to support that. There would be a section for the commentary. And with the way that Jesse's doing this right now, which is just related to the account and the company, period, end of story, it would just print that on the bottom of the report every single month. So some kind of an explanation. That could be useful, but I think what Jesse's showing now is a specific month override for the comments in those different fields. It's really just ways to include specific commentary to the month and the company. So what's the real world application for that? Maybe we are getting ready to produce our June reports and there was some sort of a flood in the basement and there's an extraordinary remediation expense in the month of June. And you see this big spike, it's way over budget, and you want to have some kind of an explanation on the bottom of the report. Flood in June affected the basement to prevent a lot of back and forth and a lot of questions. So you can add that commentary to that account for that company for the period of June, so that anytime that you print that June report now or in the future, it will include that account commentary. But what's special about that and what's important to understand is that you don't want to have to go back there and remove that account commentary so that in July, you don't inadvertently include it in a way that is just totally irrelevant to July, because again, that expense account is going to probably be back in line in July. So the period specific account commentary could be a really powerful thing. Any financial statement can include this sort of a thing. Once it's programmed to do it, you have the power to do it. It's all within your fingertips.
All right. So now I'm going to talk about journal adjustments. Journal adjustments are a way to just change the amounts on certain GL accounts. So normally these GL accounts get updated through cash receipts, for example. So when you get money from a resident, you enter it as a cash receipt. It's going to hit your cash account and probably an income account. Or when you pay bills, it'll reduce your cash account, and the other side of the equation would be an expense account. So mainly all of your transactions probably get done through cash receipts and cash disbursements. Even if you cut a check and use the wrong expense account, you could make a journal adjustment to change it, to take it away from one account and add it to another. But better off doing what's called a reclass. So you would actually find the paid item on your accounts payable and then reclass it, meaning just change the GL account on it. That's better, because then if you run an accounts payable report, you'll actually see the correct number that you change it to, versus if you do a journal adjustment, that change will ultimately do what you want, which is affect your general ledger, but it won't be reflected on the accounts payable side of things.
General journal adjustments are a blunt instrument, just saying this account should be this value and that account should be that value. As long as everything is in balance, the system, of course, will accept it, just like any other accounting system would.
Yeah, there's going to be totally legit times to do journal adjustments. So let's talk about how to do them. So first of all, you can do manual journal adjustments. I'm just going to hit new batch, pick the company that we're adjusting into, and pick the period. If your company is set up for accruals, then you could choose cash, accrual, or both. Put in the period. Let's put in the reason that we're making the adjustment. Pick the account. Obviously, if you know the number, just type it in, or you could search however you want. The amount, the way my system is set up is it's a plus or a minus. But if you like to think in debits and credits, there's a system preference where you get 2 columns instead of one amount column. You'd have a debit column and a credit column, and then you would just enter everything as a positive number into either the debit or credit column. But for now, I'm going to think positives and negatives,
Debits
pluses and
and credits,
minuses.
positives, negatives.
So now we're going to do the other side of the equation, accrued expenses, and then do minus 5,000, just the credit. And that change is 0 now. So at this point, we could process the batch, but we could also just keep adding transactions as long as it's for this company. We could also attach files, so maybe some supporting documentation, and then those files will be available whenever you come across one of these transactions. And that's got to do a manual journal adjustment, but maybe you have a ton to do, and perhaps an accountant has prepared a spreadsheet of all your adjustments that you have to make. They could actually be imported. I should have a few templates set up, but the files could have multiple companies in them or just one. They don't have to be in any hard-coded format. Like, for example, that doesn't always have to be that the company is the first column, the GL account's the second. As long as you have all the information, when you build the import template, you could tell the system what column means what. For example, this is a sample file I made, a bunch of companies, import everything at once. Just make sure to have a column for every piece of information that you need. Once it's set up, now I could just go ahead and import it.
And if it was missing something, it would throw an error and it would point you towards something that's missing.
So it went into what's called the notification center. So you can see it's queued up. It's going to start running soon, and then eventually it'll be complete. This is an earlier one I was doing. And then once it's done, you can click view. It'll show you all the detail of everything, but you also just will see a bunch of batches that didn't exist before in your listing of journal adjustments. But yeah, you can import all your adjustments, or you can manually enter them. Second. Yeah, one other option I want to talk about with journal adjustments is automatic reversing entries. So basically, if we're doing a transaction today that we know has to be reversed in some future period, we might as well just take care of that right now while it's fresh in our mind. So just check this option off, put the future period, and then when you process this batch, it's going to automatically book the future transactions. When you run that report, we'll do a query for that future period, or perhaps it's the current period when you do it, you're going to see that reversal. I just want to show some quick queries, and then we're going to do bank recs and then talk about some things that are coming soon. And we'll also talk about report scheduling and packages. Under views in the general ledger, we have these two options, by account or by trial balance. So let's just view the general ledger by account, meaning we're going to pull up one single company and one single account and look at it in detail. We will pull up this company in this case. So for example, in March, I had 751,000 of disbursements and not many receipts. But if you click on this, it'll show you all the supporting detail. And then we can end up drilling down all the way to the transaction. So here's all the batches that make up that total. And then here we have all the vouchers that made up that batch. In this case, it's just one. And then you can click on this and get all the way to the actual voucher detail record. And then it's a similar thing with receipts. So we've collected this much this month. Here's all the different batches that make up that total. You click on one of them, it's going to show us all the tenants that had payments in that batch, or maybe negative payments. And you can get all the way to the source. In this case, this was actually a gen deposit, meaning it didn't go against a tenant, but it went against that general unit, meaning it's just miscellaneous income. And then the trial balance is a listing of all your debits and credits for the period in question. And from there, you could drill in. Here's all the debits and credits, and that's out to 0. And then if you drill in like the 2191, it's going to bring us actually to that same screen that we came from before. So there's some of the different query options available from Spire itself. There's also a ton of reports to slice and dice this information as well. But now I'm going to move into the bank reconciliation portion of things. So a bank rec is really a tool designed to make sure that your books match the bank. Everything in your books matches reality, and you're going to catch something that wasn't supposed to happen. So I'm going to click on bank reconciliation, and I'm doing a manual bank rec. There's other ways to do it in a more automated fashion, which I'll talk about in a second. I'm just going to pull up the company I'm going to reconcile and the account as well. All right, and here it is. So we're doing the December bank rec for Bank of America for this account. There's different options up here, which we'll talk about. But book interest and book bank fees, for example, we'll get to that in a second. And here's just the summary information. So balance as per bank is based on items that you've already cleared off, like I've already started doing my bank rec. And then balance as per books. So this is everything that's in your books. And you want this to hopefully be 0 when you're done. It has to be 0 in order to process the bank rec. That's what's going to really tell you that things are tying out. So you have your bank statement. Let's say you're looking at all your checks. This one cleared, just check it off. But there's other ways to do this as well. So let's say we want to check off all these at once. I just held down Shift to select them all. I'll hit toggle, and now it'll clear them off. So maybe you want to clear off everything at once. So you could select everything, clear them, and then unclear, maybe just the ones that aren't cleared. You could also attach files to your bank recs. So say I have the bank statement, so I'll attach it. And now when I go to do certain reports, like my monthly report package, which includes all my financials and my arrears reports, everything else, images of invoices, it could also include the bank rec report as well as the actual bank statement that we attached, which I'm going to show you that as well. All right. So we have talked about doing manual bank recs. Now I'm going to talk a little bit about some more automated ways to do bank recs. We currently already do have a system. It's called automatic bank recs, where we hook up with your banks on a bank by bank basis, and you could import a file from the bank that they give you a file of all the transactions, and then it'll do its best to match entries that are in your system. There's different rules, check date, the amount, the vendor, they all have to match up what's in your system to what's in the bank, and then it'll automatically clear it off. We've had that for a long time, but something else that we're coming out with, which is better, is automatic daily bank recs, where through an integration, we're hooking up with a company called Plaid, which perhaps some of you guys have heard of or probably even used, whether you know it or not. It's pretty much like an industry standard for different types of banking integrations. Basically, the way it's going to work is you're going to just authenticate with each one of your banks. So if you know how to log into Chase, you're going to log into Chase through MDS, through Spire. And now Spire will be able to suck in all your transactions that actually hit the bank and then key them against what's in your books automatically on a daily basis. So it's like a rolling bank rec, just a better way to keep everything really up to date in real time.
So the big difference here, when we do automated bank reconciliations today, not using this integrator called Plaid, we have to set up a kickoff call. We have to talk to your bank. We have to talk to the implementation folks at your bank. We have to figure out how you're going to get what's called the BAI file. What we run into sometimes is that some clients are on a platform that can provide the BAI file. Some clients are on a banking platform with their bank that doesn't have the ability to provide that. And then the bank wants them to upgrade and pay more money. It's a whole kickoff for each and every individual bank. Integrating with Plaid effectively, just as long as you can log into your online banking system, you will be able to do automated bank recs with that bank. And you're going to be able to do it much faster than if we had to go through an entire implementation with an individual specific bank or many banks. So you can log into your bank account, you'll be able to do auto bank recs without going through that whole implementation kickoff procedure. You really can start getting into it the very same day, as long as you can log in.
So before I show you some actual reports, I'm just going to go into some options about when you go to run the reports. This ties back to the chart of accounts with the rolling up the accounts or summarizing the cash accounts or not, for example. So let's just go to run reports. First, we'll pull up the DGL, which is the detailed general ledger report. So when I run it, if I choose this option, which is the default, accounts are detailed or summarized as per chart of accounts, that's going to obey this setting that we talked about. So like on your cash account, it says show detail for cash basis detail report. So if I run the report, it's going to detail out. Otherwise, it's going to roll it up. So let me show you what that looks like. I already have these reports run. Let's take a look at it not summarized to start with. So you can see this report, it's 36 pages. It's all the GL accounts, every single transaction for whatever range of dates I put in. So to start with, our assets usually start with one. There are all my cash accounts. So every single transaction, they hit the cash account, which is almost every single transaction in the system is listed here. Maybe that's fine, but they're also listed under the expense or the income point of view or whatever the other account is that you used. You could also run it to summarize those figures, and that would look something like this. So now the cash accounts are summarized. So that's just a cleaner way to look at it.
If you're including all the accounts in the report, which it does by default, everything still balances either way. You just don't need to necessarily see all the detail on both sides of a cash account related transaction.
Now, similar, the start and end groups, which I talked about, allow you to roll up multiple accounts into one or not. That ties into this option: print account group totals and suppress account details only applicable to accounts that are part of a group. So if I make this true or on, it will roll up. Otherwise, it will not roll up. And I'll just show you the results of that. Start with not rolled up. So here's a basic cash flow. For example, the rental income, we have these 5 accounts, and we see the figures for each of those accounts as well as the total. Perhaps that's what you want, but maybe you want it to be rolled up. It's the same report, same numbers. Now, one other thing with reports, before I move on to scheduling reports, are just templates. So let's say when I run a detailed general ledger report, most reports have a ton of different options to pick from when you run it. So maybe you like the default options, in which case just hit run the report, but maybe every time you run it, you want all these different options selected. So rather than doing that every time, you could create a template and then just load it up. Or every time my coworker Mike wants a report, he has all these certain settings. So I'm just going to set it once, and then it's going to remember the set. Once the template is set up, then I'm just going to pull all the settings, basically.
It's there to make things faster, but just as importantly, it's there to make things consistent. Because if you're changing the report every single time and you're tweaking 18 different things on it, chances are you're not going to remember all 18 different things every single time you run the report, but you don't have to, because you'll save that as either a template or even the default template for the report, so that each and every time, whether you ask Mike to do it or you do it yourself, you're going to achieve the same consistent results.
And then finally, reports have the option to be scheduled as well. So if you do need any reports scheduled, just talk to us and we can help you get all that set up. And also report packages can be scheduled. That's something that's not available in Explorer. So maybe like the 5th of every month, you're running your report packages for the prior month, but maybe you want to just automate that. So you could schedule your report packages to happen every month. Doesn't mean they're going to get sent to the final recipients, because you probably still would like a chance to review them before they come out. This could be the start of your process, the scheduled report package. When you schedule these reports, we could choose which buildings to run it for. If it's a company-driven report, which companies, the date it's for, including relative date options. So maybe we're always running it for last month or this month. And we could also set when it actually kicks off. And the same options are available for report packages as well.
One more thing. So when it comes to distributing reports or report packages, particularly maybe in a large organization where maybe there's 200 people that work there, but maybe you have 50 MDS users, but each building maybe has its own SharePoint drive on the network, right? And you don't need 200 user licenses, but you do need all 200 of those people to be able to easily grab and have access to the reports through the shared SharePoint system that is part of your company. So we do have an option to automatically run and export and basically just place the finished reports directly into the appropriate SharePoint folders, so that in the morning, your 200 employees come in, you're managing access on those folders just through regular Microsoft type permissions. And if they have access to open up Building 100 folder, there's just going to be reports waiting for them in the morning. So we can already email reports out automatically, but that's another new method of distributing reports internally, or really to anybody that you decide to grant access within those SharePoint folders. So that's a nice new option. Thank everybody for joining, and there will be another webinar in this series released shortly. See everybody soon.